Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Monday, August the 15th. The year's 2022. Let's talk trading. Weekly open and gap. As always, these videos are for educational purposes only. Your results may differ from mine. If you're wondering why this video is coming out on Monday as opposed to Sunday night, it's because I was traveling yesterday, and by the time I got home, I was beat. So anyway, so that's why I'm doing the weekly open and gap here on Monday, which in a way is almost more appropriate. But I like doing it the Sunday night so we can see how things happen early. So taking a quick look here, we still have 3 gaps that haven't filled, and looks like everything gapped down. I know that because the columns are red. If it gaps up, it's green. So the pound has filled the gap, and you can see it's about 50 pips below the weekly open and 69 pips off the high, 29 off the low. We're putting in the opening range for the week at the moment. You can see we broke below the previous day's Friday's low. We've this big green bar here, this return bar. You can see prices come back and through that open. These are just things to look for in the chart. Like there's this big return bar here, and you can see once again price return to the open. And on this big return bar, price return to the open. Sometimes it takes, a couple of days or weeks to do it, but usually you'll get those returns. Hence the name return bar. 1,446 pips below the yearly open. You can see we've so far 3 down days in a row. So look for buzzer reversal there. We touched the low of the inside bar from 1 week ago and bounced off of it. So the inside bar on the daily was 2 days ago. We're below that, but we're inside the inside bar from last week. And if you take a look here, you can see this weekly. Oh, and I think I answered the one trader that asked about these templates. They were wondering if they could get these templates. As I mentioned, I have posted sent out the TRO video templates. The thing is, I have all of my donational indicators, and sometimes you might only have 1 or 2 years, so some of the templates aren't going to work. We have lots of pairs over 100 pips, the pound only clocking in at 98 pips in range at the moment. Buy zone traders were rewarded, had to take your profits quickly in the Asian session, and then the sellers here in the sell zone, your stop was never threatened. Something looks interesting. That looks like the daily and the weekly open on my broker are slightly different. I'm not sure how that could happen. We'll take a look at the charts. Let's see. Daily 21.29 open. Weekly 21.294. I'm going to have to talk to the broker about that. That's every now and then you see these anomalies and you wonder why. Green rats had a chance this hour to get back in at the 2070 before the price left the dock. We're about 10, 11 pips above that mark at the moment. You can see there's a big return bar. Price Still hasn't quite reached that open. We'll see what happens. And if you change time frames, I think if you look at M30, or was it H1? Yeah, M30 here. You can see this would have been the order block traders would have been looking for getting in this area. And if you wonder why I have different time frames on different templates here, it's just sometimes I like to get as much data in as possible, so I'll maybe go to M15, but you can trade, the rat zone with any method. And sometimes I'm saying if you're really having a hard time and you're struggling, look to H4 or look to H1, and then basically it almost becomes a holo trade. Lowest open here, you can see price is moving off of that. But sometimes you get down to M5, and what happens is you might have tried to take this and then it pulls you down. Maybe you stop out only to see it go past your entry to the upside. So if you're having problems, in the lower time frames, just start moving up a time frame. And that usually it'll slow you down because you won't get as many signals. And sometimes you'll actually get a stronger or more profitable signal using the higher time frame. And yes, price is the same on all the time frames. It's just that once again, the higher the time frame, usually the less number of signals you get. So it reduces your chances of getting chopped up, even though price could still move against you, even on the signal you take. It's just you won't be taking as many. So for example, here, if you say took a rat reversal, red candle closes, green candle closes, you take the high here, when it broke, it came back down, but not that much. Then it gave you a chance to take some profit. So hopefully you took it. And then once again here, red candle closes, green candle closes, take the break of the high. You can see you were richly rewarded that time. Here, if you took this trade, you were just saying it's in the zone, it'll probably leave out. You could almost call that a Hail Mary, but not really, because it's statistically, the rat reversal trigger is only one entry. You could have squiggly lines, crossovers down here. You could just play the numbers ending in 0, 2070, 2060, 2050, and just say, price is either going to move above or below those lines and enter the trade that way. But so long as you enter the trade in the zone, you could either be within the smart rat zone or the original rat zone, and just take the trades that way. Okay, looking at pivot, Bambino, flex indicator indicated shorts, so we're below the open, so that gave you a good direction at the time. We hit the monthly pivot again today. Weekly pivot doesn't look like we took out. And I'm not sure if it doesn't look like we've taken out the daily pivot. We'll see on the next chart. That's the H4. There's still an H4 pivot that's been missed. Daily pivot's been missed by 2 pips. Weekly pivot's been missed by 6 pips. But we have taken out the monthly pivot. in and out of the lower wick zone. You can see here at the top side, then at the bottom side came back in and back out right at 20.99, almost 21, 1.21 double O. So there's a nice double O trade there. Weekly range so far is the same as the daily, only 98 pips. So we're still at the 0 percentile. So we need to move at least 100 pips to the downside or about 200 to the upside to get some range. And we haven't broken out of the previous high or low on the weekly. So far this week's an inside bar. Okay, looking at the wall mall lines, even though we were at what 98 pips for the day, you can see here some of these hours are slightly muted, less than 20. We have a couple 20s on the nose here past 2 hours, which might only produce, like in this case, 1 pip to the upside. There were no pips to the downside. Actually, sorry about that. On this one, the upside would have produced 11 pips. I'm looking at the current wall mall lines. You can see here to the downside, a good 10 pips. So you can definitely still use this method with the pound dollar. You just have to make sure you have your stops placed and take profits before the market takes it back. As you can see here, there was 10, 11 pips to be had, but if you didn't take those 10 or 11 pips, you'd be at about a 1 pip profit at the moment. In fact, the other day I was playing around with something and Walmart was screaming at me, goes, you need to take those 10 pips, those 8 pips. But I was looking to see if I could get a launch of about 20 to 30 pips. So I just kept doing the same thing. I'd be up 10 pips. I'd move my break even or stop loss to break even plus 1 or 2. And I got stopped out. Finally, I was up about, 17 pips. And then I just put the stop at a logical place where I think it was below a previous high. I said, if it cracks through there, I'll just stop out. So it just depends on how you want to trade. And so I wasn't using my normally look for 2 pips and get out when price stops type of trading. I was looking more to see if I could get a longer ride, based on a few indicators, mainly indicator 2. But it just goes to show, unless you're willing to stay in for a really long time, it can be more profitable taking 2 to 5 pip trades over and over, trying to get, rather than trying to wait for 10 or pip or more. Because in the time, I probably missed out on at least 20 pips doing what I was doing, because the entries were pretty well timed. But I was just looking for price to move a little bit further than what price actually moved. So that's why it's how you trade it. And when you start out, it's best to have a trading plan. And I was doing my best to stick with it, because even though I was not making as many pips, I was sticking to the plan. And sticking to the plan sometimes is more important, because over the long haul, if you have a good plan, it's going to pay out. And that's just part of discipline. Can you switch from one mode to the other and then stick with the new mode and forget about the old mode? So, fellow traders, I hope you had a fun and safe weekend, and I wish you a profitable trading week. So, when you're sitting down at your trading screen, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.